what is kind of your consensus on how an investor should approach who knows what's going to happen with the skirmish?
Well, you definitely could try to play the news headlines, and you definitely could try to do the speculative approach and say, maybe I should be investing in aerospace and defense. But I have to say that, or maybe putting money into safe havens like golds and precious metals and things like that. Or this might be a reason why you might think about things like crypto or things like that. But my knee-jerk reaction is have a process that works in wartime and in peace, and that it's the same process, and don't get caught up in the news headlines and the speculation, because then you're just kind of guessing. You may be right, but more likely you'll be wrong. And so one of the things I teach my program participants is an analysis method on the indexes, trickle down to the sectors, trickle down to our target underlying symbols. So every time you sit in front of the computer, a 5-minute analysis, understanding what has happened in the last trading session with respect to the broad markets. Then taking it the next level, the sectors that you have on your radar. And sometimes what we do is we look at our watch list of candidates that we really like to focus on, and reverse engineering and finding out what sectors they are, and really focusing our analysis every evening on just those sectors that encompass the candidates on our watch list. And you'll find out very quickly in just 10 minutes every evening at the beginning of your analysis what the heck is happening in the broad market, and which sectors that you're following are either in perfect lockstep with the broad market or opposite, and then just trade accordingly. And if you take that methodical process, you're not introducing new speculation. You're just doing the same thing you would do any other time and responding correctly to the moves that happen, right? And so that's kind of the approach I recommend, is just do the same process and make sure your process has the ability to adjust for anything that happens in the broad market economies in the worlds.
So essentially, what you're saying is, as a student or follower of the trading trainer methodology, whether we're in war, whether we're in peace, whether stocks go up, whether stocks go down, whether interest rates go up or down, your approach is kind of neutral to fight any of those variances, and essentially consistently generate a return month over month.
Business as usual. In fact, it's been proven over and over through the last 200 years that the disciplined trader always wins. The one that pulls the emotions out and simply has a black and white trading plan. If this happens, I will respond this way with my investment strategies. And so discipline, as much as your heartstrings get pulled, as much as you want to follow the news media into investing in oil companies or selling off oil companies, investing in defense companies, selling off, putting your money into your mattress or putting your money into golds, it turns out that so long as your process can accommodate for changes in the sectors, changes in the broad markets, and give you the forward guidance. Like, for instance, so many people over the last week thought that the market was hitting a bottom and that they should start going long again. Whereas with our analysis methods, it simply says, no, what we're actually seeing is a recharging so that people can sell even more. We're seeing a little bit of the market movers trying to create enough of excitement in buyers so that they can start selling again and basically move money from your pockets into theirs. So you have to just have your process, and you have to be able to understand actually what's happening and then respond.